Well, I think we have a host of challenges, as you say, in Asia and Europe, and indeed in the Americas as well. I think, I suppose part of the relief that was taking place was that oil prices had come down. Maybe there was a sense that there's going to be a bit more of a slowdown, maybe a rising risk of a recession, which would slow down the central banks and maybe cap how far they would go, especially the Fed. But then, of course, we still have a host of, as you say, geopolitical issues. I think the unfortunate shooting of the former Japanese prime minister is a real shock. But I trust he'll recover. I don't think that's the main issue. The main issue is that China is still contending with COVID and with the challenge of the slowdown from the zero COVID policies there, and some hope of reopening, but some constraints in the path to that. And then I think we still have the underlying reality here that the Russia-Ukraine war rages on. There's still a problem of energy supply and energy prices, and the problem of energy supply is probably getting worse rather than improving at the margin. So we're still left with the same set of sort of unresolved issues facing us, which are going to continue to impose economic headwinds to growth, but unfortunately probably something of a tailwind to inflation, at least at the headline level.
Bearing that in mind then, Arnab, where does that leave you in terms of your energy strategy? We have seen oil fluctuate above and below the $100 mark this week. And as you mentioned there, the gas supply issue into Europe, our colleague Jeff's in Germany actually talking about this regards Uniper. We're looking at nationalizations of various energy companies in Europe. What is your strategy currently when it comes to those energy stocks?
Well, I think our view of it is that energy prices may not go up dramatically unless there are further interventions in the market, whether by Russia or by the West. For example, trying to cap Russian oil prices. But having said that, of course, the risk of further reductions in gas supply is there. It's real. It's I would say it's substantial. I think the main challenge is that we are not likely to have a big fall in energy prices, even if they fluctuate, as you say, or come down a bit, because even though demand is clearly going to slow, if it's not already slowing significantly in many parts of the world, we're constraining the supply of energy in the world. Russia's imposing a bit of an embargo. Maybe that'll turn up, as we're saying. We're imposing a bit of a boycott from the West. Maybe we will try to, enhance that boycott. Maybe we will, try somehow to cap the prices of Russian oil, which may imply less oil from Russia coming into the world market or the Western market. We'll have to see how the cap operates precisely. And all of those things suggest that we won't get the usual pattern when there's a supply shock in energy where price goes up sharply, the high price is its own cure, destroys demand, creates a bit of a collapse in the price because there's a supply glut, because we're restricting the supply.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.